Good morning and good afternoon. Happy Friday, everyone. I hope everyone's having an awesome Friday. If you don't know by now, Friday is my best and happiest day ever. Love Fridays, and I'm always pumped up on Fridays. So, welcome to Creating Opportunities, where we discuss Rocket Mortgage local programs and how you can add them into your process and grow your business on a daily basis. My name is Bill Haga. I'm your host. I'm an executive loan officer with Rocket Mortgage Local. I always stress local because my local discounted pricing is always better than our Detroit call center by a good 1% to 1.25%. When you calculate that on a $500,000 purchase price, that's a savings of 5,000 to 600 or $6,250. Okay, so that's huge. It could be down payment money, right? And that's just the difference between my pricing and the general office pricing. So don't let your customers, your clients go online, fill out their loan application, right? Share my loan link, have them fill out my loan application, and let's work together. Let's get our first client under our belt. I'm pretty stoked today. Um, I'll share right quick. I just came off of a call, which has me a little delayed today, but super exciting. So I've got a real estate agent in the Chicago area who I've been working with for a good 10 years. Um, she literally just left her office of 15 years because they were putting a bunch of pressure on her to use the in-house lender, in which case she wants to use me instead. So it finally drove her out of the office to a Keller Williams office. Congratulations, Keller Williams. You just picked up one awesome agent in the Chicago area. And a shout out to all my other Keller Williams agents that I work with. Love everyone. Appreciate all of you. But back to the story. So we just got this client of hers pre approved. I should say verified approved, right? Because we submitted the file into underwriting. Within 24 hours, we got underwriting approval. We were at 3:30. They were shopping. They went out shopping last night. Flo took him out, him and his fiance, and they walked in the second house, and tears literally started streaming down her face. Right, instantly fell in love with this house. So she's like, "This is it. We've got to have it." Um, so he's like, "Okay." The gentleman's pretty relaxed, pretty calm and collective. So he was like, "Okay, let's go home and we'll discuss it." So they went home and discussed it. I got a call just before I was getting ready to go online and do this Facebook Live session, and Flo was saying they're interested. They want this house. They got to get this house. She fell in love with it. I'm like, okay, let me see what I can do. Now, mind you, we had them approved for 330, list price 345, and still in an area that's going to see a lot of offers, right? So once again, we want to be the best looking at the dance, right? We want to be chosen for the ones to purchase a home. So I jumped into gear. We started at 345 with the list price, and I also worked up numbers at 350. I know you probably don't know yet, but rates dropped today by a good quarter to 3/8 of a percent. So the timing couldn't have been any better. So based off of what I quoted them at 330, at 340, the payment was almost the same. Down payment was almost the same because it's a percentage. So no big deal there. So this is in Illinois. Illinois has high taxes. So seller pays taxes a year behind, right? So we're going to get a nice tax credit. So we can go up five more thousand, knowing that the seller is going to be giving us that credit for that anyway. So that offsets it. All right. So the rate decrease offset the payment increase, and the taxes that the seller is going to have to give us back on as a credit at closing is going to cover the additional 5,000. So they literally both of them started crying over the phone, super excited, and so I said, "You got to stop crying, got to focus, got to get your offer in, right? We got to get this house." So I reached out to Flo, let her know that everything was good at 350. I submitted the file back in to underwriting for another vow, right? Because we just went up 15 grand. So now it doesn't qualify for the vow until, of course, the underwriter sees it again, right? So the moment that I get that vow to come through, I'm going to receive an email. I'll send that email out um, to Flow, and that'll be the vow, right? The verified approval letter, which everything on our pre-approval letter will be checked off at that point in time. And then once she gets that over to the listing agent, then I'm going to call the listing agent, follow up on everything. Once again, pitch how strong our buyer is, and we can close in 2 to 3 weeks, right? So we just went up 5,000 over asking price, and we're going to close probably in a half the time than any other lender is going to, which makes us the prettiest at the dance. And that's what we love to see. So awesome. Can't wait to see that one come in. Um, ah, Love it. That's why I'm all pumped up. So I don't know if I just hit the mute button or whatnot. Let me double check. Nope. Okay. All right. So today's agenda, we're going to talk about new construction. All right. New construction has been a big topic. Builders went out there and built a bunch of houses, and then all of a sudden interest rates didn't come down. Right. So they didn't get the sales that they were expected to. So now there's some inventory sitting out there, and it's slowed the building process down. All right. So those homes, I refer to them as spec homes. Okay. They're homes that were built with really no buyer specifically in mind. Right. So, generally speaking, when you're doing a new construction loan, the builder 9 out of 10 times has the property, right? They're building in a subdivision. If it's a subdivision setting, you're going to go in and buy the complete thing, complete package, lot, house, everything already completed from the builder, right? So as you go into the financing, okay, that's a spec home. The builder built it on his dime, did everything, right? If the builder owns the lot and you come in and you're buying the lot and you're having the builder build it, all right, those are referred to as new construction loans, right? And there's some varieties within these programs, and that's one of the things that we're going to cover today. So generally speaking, you would have to put down as a buyer 10 to 20%, depending on the bank or the mortgage company that you're working with in a program and your credit scores and all that good stuff. But at the end of the day, you're putting money down, and then you're paying interest only for the loan amount while the process of going through the build, right? Each month you're paying an interest only payment based off the money that's been used so far to build the home. And then at the end, then that's when all that gets paid off and it gets rolled into a 30-year mortgage. So in this first phase, it's like a construction loan. Okay. That's why you're paying the interest only on that construction loan. A lot of people will go to that point, and then that's all carried by the builder. And then they'll have myself come in and finish the loan off. All right. So we'll do a purchase if they didn't own the land. If they own the land, then there's a chance that we can even do a refinance versus a purchase. And we're going to get into that. Right. So a purchase, you're bringing your money to closing. A refinance, you get to roll your closing costs into it. So you get to keep your money. All right. So there's a big difference in that. And we'll get to those details here in just a minute. All right. So new construction, and this is just generally speaking, just a definition across the board with all loan programs. All right. New construction is defined as property completed within 12 months of certificate of occupancy. Okay. Um, it's never been occupied previously. And renovations only, like if you're doing a renovation, right? Then at that point in time, if there's any type of modification to the foundation, then it's considered a renovation, okay, instead of the normal new construction. All right, programs. FHA qualifies for this, all right? VA qualifies for this. All of our Fannie and Freddie programs, our jumbo programs. The nice thing is FHA, it's just your primary, VA, just your primary. With Fannie and Freddie and our jumbo programs, that can be your primary residence. You can have a new second home built, an investment property. All these are allowed. Okay. Now, Obviously, there's some key requirements. As we get into this, we're going to dive into some more details. Okay. So, of course, there's got to be a full appraisal done. The property must be completed. Can't can't close on a property that hasn't been completed. Doesn't have its occupancy permits. So all these things have to take place. A completed property photograph is required for tax purposes and things of that nature, because taxes are always estimated the first year because they haven't been assessed yet. Okay, so that's all part of assessing the taxes. And in some cases, there's not a complete address yet, right? So we can use the city and zip code if there's no address available. So that's pretty good stuff. Purchase contracts, same state contracts, nothing special. We can use lot numbers. That's acceptable for a full address if that's where we're at with the phase. And then the buyer typically pays the owner's title policy and any transfer taxes. Okay, so those are pretty common across the board. Now, VA and FHA, they have some unique tracking features. Okay, so VA allows customer preference items like floor coverings unfinished. Okay, so a builder can actually give an incentive for flooring. Maybe they want to upgrade to flooring or whatnot. Okay, so those are some options with VA. FHA requires a termite inspection. Just because it's newly built doesn't mean it hasn't been newly ate up by termites, right? Termites are brutal. Okay. Let's see here. So, generally speaking, when you're going to a bank and you're doing a new construction, right? Once again, you don't own the property. You're going to get your construction loan together. This is normally, like I said, you pay interest only per month. It's in phases, right? So the builder is going to get paid once the foundation and groundwork and everything's ready for the house to be built on, right? So once that's completed, then they're going to submit their information or someone's going to come out and inspect. And then at that point in time, they're going to pay them for that piece. All right. So then they're going to start a new phase. Maybe now they're going to come in with all the framing materials, right? So that's going to get paid out, but everything's paid out in phases at that point in time. Um, and then once the house is completed, once again, the appraisal's done, final walkthroughs are completed, and then at that point in time, the loan's ready to close. As your primary residence, once again, you have to move in within those 60 days, okay, just like anything else. All right. Um, so, want to kind of cover a few things here because, like I did mention earlier, there's opportunity here that you can actually do a refinance. And that's pretty cool in these scenarios. Okay. So, once again, all my programs um, qualify spec homes. All right. And we're going to get into the refinance section. So, for houses already built and empty, sitting there, all of our programs qualify for those. All right. So I want to make sure that's clear. We can move on those right now, today, no issues whatsoever. Close those in 2 weeks, 9 and 10 times. They're empty, right? We don't have to worry about anyone having to move out, need time to, get all their junk of 30 years sitting there. We don't have to worry about that stuff. So as long as our buyer's ready, and they always are because we make sure everything's up front, we can close them things in 2 weeks. All right. So there's nothing sweeter than that for a builder, for all of us, for the buyer. Everyone kind of, gets to enjoy that benefit. All right. So let's get into some of these details. So if the client does not already own the land, the loan purpose must be a purchase on all new construction. Okay. That has a closing date less than 60 days. However, if the home is currently under construction and construction will take more than 45 days to complete, the loan must be sought as a new construction. If the home is currently under construction and construction will be completed in 45 days or less, then the loan purpose must stay as a purchase. If the client already owns the land purchase must be a refinance. Okay, big difference, right? Builder owns the land, purchase. If the client owns the land, there's a chance that it can be a refinance. All right. So Property eligibility. The entire structure and all components are new, and the dwelling features no physical depreciation. It's your primary residence. This is for Fannie and Freddie. Okay. Primary residence, second homes, and investment properties are allowed. That's huge. I mean, I know in an area that I'm in, I want to get into investment properties, but there's just no property, right? So I'm going to have to build something, and I'm okay with that. I can hire a local builder, give me a cut on the build price so I can save there. Everything's going to be brand new, should be good for a good 5 years. So I'm pretty excited about that. All right. So investment properties are allowed. The property must be completed at closing. Once again, photographs of the completed property is required for tax purposes. And if there's no address yet, then we can just use a city, state, and zip code or a lot number. All right. FHA is a little different. All right. They got their own government guidelines and all that detail. So new construction purchase and refinance transactions require a full appraisal with them as well. Property is considered new construction once again if both of these apply. The property was completed less than 12 months from the issuance of the certificate of occupancy, and the property has never been occupied. All right. Um, Primary residence only for an FHA. However, once again, FHA makes a big section, right? A big percentage of the population out there buying. Well, there's companies that don't even offer FHA loans. All right. Some credit unions, some banks, they don't even offer FHA loans. So another opportunity here, right? All right. The property must be completed at closing, just like anything else, photographed for tax purposes. All right. But once again, an FHA, we can get it done. Our Jumbo Smart program. Whew, I love jumbos. I mean, my goodness, if we're building houses, let's build some jumbo houses, right? The entire structure and all components, once again, are brand new, no depreciation. Now, this can be your primary residence, your second home, and your investment properties. All right. Once again, if you're looking to build in a really nice area and you're looking to build a 4 unit apartment complex, and you're going to be stepping up into that $1 million arena, this Jumbo Smart program's ideal. Ideal. I mean, it comes with extended years, interest only. I mean, all kinds of different options within this program. All right. So that's huge. New construction, primary residence occupancies, Fannie, Freddie, Jumbo, all that good stuff. Just in FHA, just need to know that if you're going to be your primary, you need to step into it, move into that thing within 60 days of being completed. All right. So there's some differences when you can refinance. All right, let's talk about this whole refinance piece. Okay, kind of understand what we need to do when we're buying one. Okay, now when you're using these programs like on the spec home, I mean, these are just 3% down programs, 3.5% down for FHA, right? It's those down payments that we're dealing with and not the new construction down payment, right? Because that's the construction loan part of it. Let's talk about refinances right quick. If the client owns the land and is purchasing the structured home from a builder, this is now considered a refinance. Okay, so let's talk about closing cost. The land itself, the purchase of the land, the builder's construction cost can now be rolled into the loan. Let me repeat that. If you have a buyer and they're going to buy the land, hire a builder to build on that land, that can be considered as a refinance because they purchased the land. Okay, they own the land. So at that point in time, the cost of that land, right? Because they're going to put a deposit on there or down payment, even earnest money, right? This can all be done in one loan. And then at that point in time, the builder's construction cost can be rolled into those closing costs. And then once that thing's finished, it's just a refinance. All right. So they don't have to roll those all those closing costs get rolled into the loan versus our buyer have to come out of pocket for the 3.5, 3%, 5%, whatever they need to make it work based off their debt to income ratios and program. All right, that's huge. All right, another scenario. Client owns the land and has acted as their own contractor. Now let's talk about this. There's a lot of loan programs out there that restrict someone from building their own home. It doesn't matter if you're a builder for 30 years. Uh, it's just one of those things, right? I think it's too many hands in the cookie jar, if you will, because it's the same hand, not different hands. Because there's been a past of unethical builders in the past. They'll just run off and take money, right? You never see them again. All right. But in this scenario, right, client owns the land and is their own contractor and builder. They can be their own builder. All right. In this scenario, it's just a refinance as well. But you get to roll in more closing costs now, right? The land, the construction costs, the payoff of the construction loan. Um, you can recoup funds from the transaction. All right. Verified funds like any down payment money, right? That stuff can all come back to you because once again, it's a refinance. Those closing costs get rolled into the loan versus you having to come out of your pocket for them. All right. So in these scenarios, we want to make sure that we can understand the differences between the two so we know where to take that buyer, right? So if you got a buyer who's looking for the typical just plain old construction loan, right? They just want the construction loan where they're going to do the interest only, builder gets paid in phases. If they're going to do that process, then I'm the end guy for that. Okay. I can still help them out and close the loan and pay off the construction loan and turn it into, a final 30-year fixed program or whatever term they want. Okay. So I can do those all day long. Spec homes, this is when they qualify for my programs up front from day one to closing. Everything's all within this one program and in closing. Okay. Nothing separate. Another case, hey, my buyer actually owns the land or wants to buy the land. Perfect. That's a great scenario for me as well, right? Because they don't have to come out of pocket. We can roll everything in as a refinance. This is a way better program than getting them into a construction loan. Way better. Okay. So I need you to understand the differences so you can identify these up front so you know who to refer your clients to. Okay. I always say refer them to me. And then if I can't do it, let everybody else figure it out from there. But that's me. Right. All right. So I love spec homes and there's a bunch of them out there. All right. So there's already inventory in your communities. All right. That we can instantly plug right into and close those in 2 weeks. All right. I can't stress that enough. We can close those loans right now in 2 weeks once we got a buyer for them. Okay. This is a great time for you to introduce us with the builder, right? We've got builder programs. Soon we're going to be lending money to builders so they can complete their and build more buildings, right? Build more homes. All right. So we got to do some business. We got to do it sooner than later. Okay. Because there's programs out here that need to be used. And we've got people sitting on the fence. Oh, and back to that ordeal today. The greatest thing was that interest rate that I'd be locking him at if I was locking it right now was a 6.25%. All right, that's pretty solid for a conventional, right? And at the same time, he's getting his free 1.0 buy down. Guess what his rate is for the first 12 months? Anybody? What's his rate? We're locking him at 6.25 today. What would his rate be for the first year? Anybody know? A 5.25. Yes, 5.25% rate for his first 12 months payments. After that, it's just going to adjust up to the 6.25% payment. But what's happening? Rates just dropped today. They're getting all kinds of pressure put on the feds right now to be dropping rates because the inflation's nowhere near 9%, right? We're still down there hovering around the 2.5 mark, I think, maybe 3. So where's our interest rate cut? That's what they keep saying. So when these rates cut, we've got to be ready to rock. All right. We've got to be already out there as boss ladies handling business. They already got to know who we are. right? So when the time comes, you know what? I saw I saw that that real estate agent. What's her name? Hmm. Oh, Bernadette Bay. Yeah, that's it. Yeah, I saw her. She had a Facebook post that she had made. Just so happens, that's when she was working her tail off, Coach Ella teaching her how to do marketing. Yeah, that was like months ago. But this lady saw it, now become a client, right? So I know we've got some brokers that are among us. You may have one or two or multiple offices. I want to talk to you. All right. I want to meet with you. I want to meet with your offices. I want to get this information out. Once again, who doesn't want a rate that's 1% lower than the current market? I do. I mean, sign me up for that, right? Especially if I'm a first time home buyer. If I can get a break on a payment for the first year, my God, that's huge. That allows me to put money in the savings account in case that furnace goes out or in case, that water heater goes out, whatever. But it's an opportunity for us to help our buyers, our clients, and put them in the best situation that we can be from the very beginning, right? So, brokers, if you haven't set up a 30-minute, um, what I like to call breaking your business down to see how we can implement my programs, how we can market my programs, how we can align ourselves within your community, your market area, right? Where you're the ambassador and you know everything that's going on within your community. We got to set ourselves up for the future, right? We got to put ourselves in place to be successful. All right. It starts today. Set up a meeting. There's going to be a link available where you can set up a meeting with me, 30 minutes. I can normally get through it in 30 minutes. If we got a lot of questions, I'm happy for that. That's great. The more we know, the better we're going to be together. All right. So if it lasts longer, no big deal. I can go to an hour, 2 hours, whatever it takes to get everyone up to speed on these programs. All right. If we've got a direct connect to builders, why wouldn't you want to implement that in your office? If we're giving everybody 1% below market rate, why would you not want to offer that to all your clients, right? Especially your clients that are sitting there not even looking because the rates are too high. The rates are too high. As property values are still going up. Okay? They don't understand, and it's our job to help them and educate them so they do understand, right? So we've got a ton of programs that just came out. Um, our self-employed program. I know that Stephanie Stansel in Long Beach, California loves the program. We just created some marketing program or marketing materials for her that are co-branded with me. So she can start going to every business that's in her community and talking to other business owners. My gosh, did you know that, if I use my tax returns, I couldn't buy a house more than $100,000 right now. But Bill and at Rocket Mortgage Local, they got a bank statement program that you can use your business bank statements or your personal bank statements, and there's a good chance that you can qualify for, a respectable 500,000, $600,000 house. Holy cow, I didn't even know that was out there. So it's all about the conversations, right? Just make sure that every conversation that you're having, that you're adding some kind of value to it. If you're doing that on a daily basis and being consistent, everyone in your community is already using you anyway. Okay. So if not, start being consistent in these ways and these things will start happening for you. I promise. Promise you. All right. So next week we're going to do new construction for condos. Condos is a totally different beast. All right. There's different types of condos, different classification of condos. There's a C type, there's an N type. I don't know. There's more types. We're going to get into all of them, okay? Because I know that new construction is going on, especially on the coastal areas, um, because there's growth, right? the market looks great. Stock market is, I mean, out of control, running at, high levels. Our housing market is just waiting on these rates to give us a break. And then everybody's going to be buying, everyone's going to be looking to sell, right? Mind you, I got the co-branded marketing platform that I pay for. I give to you for free. That gives you all the marketing stuff that you need to be a professional, you know, listing agent. If you really haven't, mastered that area yet, I've got that material to help you out with as well. So let's make it happen. All right. Sooner the better. Like I said, these rates just dropped today. And if they drop another, they're talking not a quarter, not a half, they're talking 1.5% by the end of this year. All right. Wow. Just think for a second. That is going to kickstart, not only a purchase boom, but also a refinance boom, right? Because refinance rates are lower than purchase rates. Most people don't know that. But yes, refinance rates are lower than purchase rates. All right. Right now is a great time to refinance if your rates, over, I would say, 6.5%. If you're on a conventional or any other program and you're at 6.5%, it's a great time to refinance. I just closed a refinance a couple days ago. Um, we're paying off all our credit card debt. We're saving like $1,500 a month. Gave her 15,000 for reserves, right? So we're not using credit cards anyway. At that point in time, we've got, reserve money if we need anything. We're not pressured, right? All that pressure just went away. Amazing, right? This is like the rewards, the presents that you get for being a homeowner. All right. So if you've got a client who closed on her home 3 to 5 years ago or longer, pull up that client list, contact me. I'd love to help them. This is a great opportunity for you to have another conversation. Me have a conversation. Hey, you've been here for a bit. Are you looking to purchase? You got a lot of equity sitting here. Maybe we can, pull out a bridge loan, pay everything off. So now you just have an interest only payment on that until this thing sells. And let's go get your upgraded house. Right? I mean, there's all these conversations that we have, and these programs open those conversations up. All right. Got to have something to talk about. And that's what all this is for. All right. That's all I've got. Thank you again. Let's find out who's going to be our first client. Okay. I'll be available all weekend. Let's get them pre approved and let's get them on the contract. Bye, everyone. I hope everyone has a great weekend. Take care.